Good morning, good evening, good afternoon, wherever you are. So, today I'm going to explain my entry model. I'm going to explain my entry model. I'm on my middle time frame on my M15, be it M15 or M30, wherever middle time frame you have. So, right now, this is my middle time frame, my M15. I'm marking my internal market structure. I think I've uploaded a video explaining how I identify my internal market structure. So this is my internal market structure where I have a bearish market structure. This is the high and this is the low. And this is the break of structure which causes. So this is the high which causes the market to break the structure and then market retested. So what am I looking for when the market retested to the order block, which causes the market to shift to the downside? And then that's what I'm going to explain. So we have another one here. This is bullish market structure whereby the market internal is going to the upside, and then it came here. Let me mark it. It came here, and then it goes down, creating a low, and then it continues to the upside. So this one we can say this is a bullish internal market structure. So when the market came back here, right, retested to the order block that causes the market to break the structure right here. What am I looking for so that I can enter the trade? I'm not just guessing to enter the trade. So I have three types of entry confirmation that I use. This is very simple. What you have to do is to wait. This is you can easily identify these things, but the hard part is to wait. Is to wait. You have to wait for this thing to perform and then you enter your trade. So number one, market is here on our order block. This is what I want to see. When the market was going to the up to the downside, market is going to the downside and then it induces the retail traders to enter early in the market. And then what happened? So all the retail traders will enter the market and put their stop loss here, and that this is liquidity. So the market came here to sweep all the liquidity before going to the upside or downside. So right now, market sweep the liquidity. What next? Number two, I have to look for the market shift, confirming to me that the market is shifting either to the bull, either to the upside or to the downside. Simple. So the market created to me a market shift right now. So what am I waiting for? I'm waiting for the third part, waiting for the market to come to my order block, which sweeps the liquidity right here. Then I enter the trade going to the upside. Simple like that. That's number one. That entry confirmation number one. So entry confirmation number two is okay. Let me remove this noise. Entry confirmation number two. Simple. The market is here. Guys, don't trade when the market is somewhere here. When the market is on the random, like in between right here. Wait for the market to come to your order block. Then you look for the confirmation and then you enter the market. That's only way you have to enter the market. So the market is going down, right? And then it induces all the retail traders to enter early in the market, which create to us a liquidity. So what happened? The market came back here, sweeping all the liquidity so that it will get the fuel to go up. So what is liquidity? Liquidity is sort of like a fuel in the market, a fuel that causes the market to go either up or down. Simple. So the market swept all the liquidity right here, and then what happened? It pushes to the upside, but there is an order block right here, right? And then that order block is proving to us that it works, but it doesn't have power because there are more bulls in the market than bears. So what happened? The market came here and created to us a market shift. So what is this? This one is what we call a flip zone. A flip zone. So I'm waiting for the market to come back to my flip zone. then I enter the trade. So take note on this one. As you can see, this flip zone mitigated our order block which sweeps the liquidity. Okay, sorry. So as you can see right here, let me just delete this one. As you can see right here, the market sweeps the liquidity right here. The market sweeps the liquidity, and then what happened? The market came back here because the order block will shows to us that it works, and then market rejected to the order block. And then what happened? Because the order block is weak, and then it created to us a market shift. But this flip zone mitigated our order block that sweeps liquidity right here. As you can see, it mitigated the order block that sweeps the liquidity. So which means this, when the market shifted to the upside, it has to retest to my flip zone, and then I enter the market knowing very well that the market is going in my direction. Simple like that. And then the last one, the last one. The market is on my zone, is on this zone, right? Whether it's a bullish market, is a bullish structure or is a bearish structure. I have to wait for the market to come back to my order block that causes the market to shift. So right now we're here waiting for my confirmation. So number one, the market induces, okay, the retail traders, and then came back here, sweep all the liquidities, and then came to my order block. So this order block, if this order block has to work, it was supposed to cause a break of structure right here. But because the the bulls were more than the bearies in the market, they are causing the market to shift to the upside. So when the market reaches here, it tries to push down and then goes up. But here there was enough liquidity for the market, and then the market swept the liquidity and then created to us a market. So what do I call this one? I call this one a flip plus sweep zone. So I'm waiting for the market to come back to my flip plus sweep zone, and then I enter the market. Simple like that. So these are the three confirmation that I'm looking for when the market reaches my zone. So the problem with the traders is we want to we are impatient. We want to trade in between. We are on my 15-minute time frame, and then I'm just trying to force a trade so that I will earn money. No, you have to wait. Wait for the market to enter into your order block, and then after that, then you wait for your confirmation. These are rules. You wait for your confirmation. You are waiting for three things or four things. Number one, you're waiting for the liquidity sweep, okay, for the inducement. Number one. Number two, you are waiting for the liquidity sweep. Number three, you are waiting for the market to shift either to the upside or to the downside. As you can see, shifting to the upside, confirming to you that the market is now shifting to the bullish, to the upside or to the downside. And then the last stage, you are waiting for the market either to come back to your flip plus sweep zone, or to your flip zone, or to your zone, or to your order block that causes the market to push to the upside, and then you enter the market right here. So that's what we want to see for us to enter the trade. Simple like that. So I have rules. I have 5 rules that I obey when I'm trading, because I'm a day trader. So number one, I risk 1% per trade, maximum 1% per trade. Why? Let's say I have $100, right? The main goal, guys, is to protect my capital. So okay, let's say I have $100, and then this $100 I have to protect it very well so that I will be in the game for a long run. Okay, so I'm risking 1% on my $100. So which means maybe I'm risking a dollar to make a $3, because I always trade 1:3 risk to reward. So maybe I'm risking a dollar to make $3, and then This can protect me from blowing my accounts. When I risk 1%, I know for a fact I have 100 chances to trade. I have 100 chances. So which means on 100, if I lose, maybe what can I say? If I lose like maybe 30 trades, okay, on 100 trades, and then I win uh 70 trades, which means my risk to reward is okay. It's okay. Even if I lose 70 trades and then I win 30 trades, it's okay. It's okay. Because you can see like if I win, let's say I always take 3 trades a day. Let's say that day I took 3 trades, and then first trade I win $3. Second trade I win $3. Third trade I lose $1. You see, I have out of 3 trades, I was supposed to win 3 trades, so which means it's 369. I was supposed to win $9, but I lose 1 trade, so which means I win $6 and then I lose $1. You see, that's how I protect my capital. That's number one. Rule number two, Rule number two, maximum trades of 2 to 3 trades per day. Only 2 to 3 trades. So there are most of the traders out there. Yeah, I saw like the social media is killing most of the traders. Most of the traders. Why? Because you see some of the people uh putting maybe 50 trades a day, or 100 trades a day, or 25 trades a day, or 10 trades a day. You know, at some point, those guys, there are some of those guys who are trying to catch your attention so that they get followers, most of them. So the profitable thing that you have to do as a beginner, as a professional, whatever, is to minimize your trades per day, but make sure those trades, they are profitable. They are A plus trades. So me, I only take maximum of 3 trades per day. So which means if I reach 3 trades a day, if I take three trades a day, I'm done for that day. I have to do something. I have to go and play football. I have to just find something to do, watch a movie or do something. Why? Because I have to relax first and then start again. Tomorrow I will have another view and then win again. That's how I take my trades. And then number three, I only take A plus setup. So I don't just take a random setup. Like say I saw a candle on the daily time frame, or on the 4 hour time frame, or on the 15-minute time frame. I saw a bullish candle. So obvious the market is going to go down a bit, so I have to end. No, no, I don't do that. I waited for my confirmation to place, and then I place an entry. I only wait for my confirmation. I don't just put entries, random trades. No, it's unprofitable to me. Okay, so on 3 trades, I make sure that on 3 trades, I place 3 A plus trades per day maximum. That's all. Then I'm good for the day. Right. And then number four, journal every single trade. This one helps, guys. Let's say I took the first trade, I have a loss. I took second trade, I have a loss. I took third trade, I have a win. So I have one win and 3 trades. And then I took screenshots. I journal them. I write something what I was like I was missing on that trade. It those things can teach me next time to not to repeat the same mistake I did again. So next time when I saw the same thing again, I'm not going to repeat the same mistake again. Why? Because I have a proof that tells me that this mistake, you did this mistake, and it's going to, if you repeat it, you are going to make a loss. So next time when I saw the same thing, It reminds me that the same mistake, if I do it, I'm going to make a mistake. That's how, that's why I journal every trade. So each and every day, I make sure on those three trades, maximum three trades, either I place one trade or two trades or three trades. I make sure that I journal each and every trade. And then after that, when, okay, there's a time whereby I trade and then I reach my maximum trades per day. Let's say I place three trades that day and then I'm done for that day. What am I doing? I'm going back to my data, and then I'm start reviewing, like where am I taking it wrong, or what's missing. I'm just trying to perfect my system, right? So that when I'm going to the market again, when I'm starting again the new day, I have a fresh mind. I know what to do in the market. Same thing to you guys. If you are a beginner, try by all means to follow these things that I'm telling you. You're going to be profitable. These are the mistakes that I did when I was a beginner. So I hope and I'm very sure that if you do the same thing, you're going to improve and be profitable in the market. Okay. The last one is to stop trading after hitting your loss limit. Stop trading after hitting your loss limit. Let's say I said like okay, every day I have to place a trade and I have to risk maybe $100 or $50, right? And then what happened? I place my first trade, uh, I lose it. I place my second trade, I lose it, right? And then before I place my third trade, I already reached a limit, my $50 that I tell myself like this is my last limit for the day. So I stop trading, wait for tomorrow, refresh, delete everything, start to analyze again, have a new view for the market, and then this can help. Trust me, this can really help. So one thing you have to know is these rules makes me profitable. So which means one way or the other, it can make you profitable again. So what you have to do is to take your time. Take your time, analyze your charts, wait for the market to print out your confirmation, and then after that, obey your rules. If you are having a challenge, right? I always say like these things is very hard for you, for someone to like master these things alone. Try by all means to find someone who can teach you, who can guide you to do these things. Try by all means to write down your rules, obey them, teach yourself how to obey them. Guys, one thing that you have to know is like trading is a mirror, like which shows you your behaviors towards the market. I always say when you master trade, at some point you master life. Why am I saying that? Because trading is a thing whereby it reflects your emotions, it reflects your behavior, even what you do like out there, like what you do out of trading, things you do out of trading is the same thing you are going to do when you sit on the chat. Impatient, you are impatient, you are emotional, right? These are the things that you have to work on yourself and then improve yourself on those things, and then try by all means to obey the rules you set. Okay? Okay. For example, someone can say, when I wake up in the morning, first thing that I do is to wash my face. That's a rule, right? That's your own rule. And if you disobey that rule, no one can come and tell you like, hey bro, you didn't obey your rule, yeah, this and that. No, but these are your own rules you have to obey. So try by all means to set rules and try to obey those rules. For example, me, I'm a Christian. I can tell myself like when I'm going to sleep, I have to pray. When I'm waking up, I have to pray. Okay, these rules, no one is going to tell you that, or no one is going to remind you that, okay, bro, yeah, you're about to sleep, you have to pray. No, you have to obey those rules. Okay, when I'm about to sleep, I have to do something. Try by all means to do these things so that it must be a thing in your system when you when it reaches a time to pray, or when it reaches a time whereby you have to do something, when you master it, your body, right, your brain will tell you like, it's time to do this thing, it's time to it's time to pray, it's time to wake up, it's time to do. Okay, there's this thing whereby someone can say, I wake up at 6 o'clock every day, and then I set an alarm every day, each and every day I set an alarm at 6 o'clock, right? And then when the alarm rings at 6, I wake up every day. There's a time whereby you don't set an alarm, but your system, when time reaches 6 o'clock, automatically you just wake up because it's now a system installed in your system, right? That's the same thing as trading. You have to do it consistently and obeying the rules consistently so that it will be a system which is installed in your system. That's how we make profit in the market. So these things you can master it even in 1 month, even in 7 days. But the real thing, the important thing is to master you. This is very, very difficult. Is to master you, to master yourself, to teach yourself to master something, to install a system in your system. That's what we want to do. So if you can't do that, find someone to help, right? And then if you do that, you can see like, most of the traders can take 4 years, 5 years, 7 years to master a system so that they can make profit, they can be profitable in the market. Why? Because everyone who is introduced in trading have a hurry to make profits. Oh, I'm doing trading. I need to make millions within a day. I need to make thousands within a day. No, you will make millions of dollars in the long run. Master the skill. That's the first thing. Don't try to fast forward the system. No, the system will tell you what to do. Just take it slow. Master the system. Everything will flow. Trust me, everything will flow. I spent 4 years to master the system just because I didn't have anyone. I didn't have even money to pay a mentor. So I learned all these things by myself. And then trust me guys, I didn't just wake up and make profits. No, I make losses. I blow accounts, right? Just because I want the system to give me money fast. Okay, this is not the right way to do. Try by all means to master the system. Okay, when you master the system, try to build the system. Try to build money bit by bit, bit by bit. $10 to $15, $15 to $20, $20 to $30, $30 to $40, bit by bit. When you do that, guys, trust me, it's going to work. You are going to enjoy the profits just because you are doing the right thing at the right time. So someone can say, hey bro, I deposited $50, and then tomorrow you'll be like, bro, I blew the account yesterday, bro. $50. Wow, you bro. What were you doing? You'll be like, the first trade I just risked $30. Why? Why? Take your time. You're you are going to be rich. That's one thing for sure. You are going to be rich only if you follow the rules. Only if you follow the rules, right? So I was a guy whereby I was stuck. I was stuck with, what can I say? I was on social media too much, whereby I'm looking for those traders who are making a lot of money within a day. And then I tell myself, okay, if they make this lot of money one day, I think me I can do it. Trust me, I blow lot of accounts just because of the same mistake. So guys, if you want this thing to work, try by all means to follow the rules. Do what is to be done, and all things will come. Money will come after. So let me try to find the setup. So right now, I think on my last video, I've explained how we mark up our external market structure. So right now, let's say this is our market structure, and then let's say this is our high. This is our high, and then okay, this is our high. Let's say this is our 15-minute high. 15-minute high. Okay, and then right, this is our break. Okay, okay, this is our low. I want you to take this one as a low. Okay, so I'm marking, let's say I'm marking internal market structure, guys. This is our 15-minute low, and then this is our break of structure. Try by all means to take your time. Try by all means to take your time to mark your charts so that you won't be confused by anything. And then after that, I have to mark my order block that causes the market to break the structure. So this is my order block. So mostly I use a ranging method to mark my order blocks. So this, as you can see, the market came down here, and then try by all means to push to the upside, and then consolidating somewhere here, and then push to the downside, breaking the structure right here. So this is a consolidation whereby the market was consolidating. So I mark this whole thing like this, simple like that. So right now, I know for a fact that, okay, take it like this is the 15-minute low, and then this is the 15-minute high, and then take it like this. Take it like this. So right now we are in a random chart whereby, as you can see, the market came back here, right? It didn't mitigate our order block. So I waited. If I may to mark my internal structure for my 15-minute time frame, the market came back here, came down, came up here, and then do this, sweep the liquidity right here so that it will gain the momentum to go up. So this is the internal breakout structure. As you can see, this is the internal breakout structure of 15-minute time frame. That's what I do, guys. So on my 15-minute time frame, I was waiting for the market to come to my order block. So what happened? This is the high, a new high. So let me mark it like this. This is a high. So what happened? This, as you can see, this candle, okay, this candle mitigated our order block. So as you can see right now, the candle closes above this high, which tells me that there's a breakout structure, internal breakout structure in 15-minute time frame. And then I go to my M5, on my M5, that's where I'm looking for my entry confirmation. Guys, take note, I'm looking for my entry confirmation on my what? On my M5. Simple. So what happened is the market, this is the candle that shows me that the market mitigated our order block. So I don't just enter the market just because it mitigated my order block. So what am I looking for? I'm looking for my entry confirmation. As you can see, my entry confirmation is say the market came back here, right? And then pushed to the downside, come back here, push to the downside, right? Come back here, break the structure. As you can see, This is not a breakout structure. Last video I explained how I see the breakout structures. A breakout structure is only whereby a candle closes above or below the high or the low. So as you can see right now, this is a liquidity sweep. So as you can see, this was a liquidity sweep. Why am I saying it's a liquidity sweep? Because this candle didn't close below this what this low. So I don't take it as a market shift. Why? So right now the market pushes to the upside, right? Creating a market shift right here, which was a what? A liquidity. What confirms to me that this liquidity, because the market came down here and created a market shift. You see, this one is a market shift. So right now, I confirm that the market, now, first thing, the market mitigated our order block. Second thing, the market uh, induces the retail traders and then sweep all the liquidity, right? And then created to me a market shift right here. So what am I doing right now? I'm marking my order block, which causes the market to shift to the downside. So guys, as I say, I always mark a ranging like this. So this is an order block which causes the market to shift right here. So what am I doing? So as you can see, I want you to see something. I want you to see something. Market push to the upside, come back here, sweep all the liquidity, come back here. Because this order block works, market rejected a bit, but it doesn't have power, and then shifted to the downside, created to me a market shift. So as you can see, there is a what? There was a rejection on this order block, right? Let me take this one. There was a rejection, as you can see, there was a rejection on this order block, right? You see, the market tried to reject on this order block, but the bearish were more than the bulls in the market. Okay, and then what are we waiting for? We are waiting for the market to come to my order block, which causes the market to shift to the downside. And then when the market is here mitigated, so I don't just enter just because the market mitigated my order block. What am I waiting for? I'm waiting for the bearish candle. I'm waiting for the bearish candle. This one is the bearish candle. So when this bearish candle closes, that's where I enter my trade. Like right here, put my stop loss on the last uh, on my sweep zone, on the order block that causes the market what? To break the structure right here. And then I targeted the last low or 3R. That's the low or 3R. So this is the last low, right? As you can see, this one is the last low. So I'm done. I'm done like this, guys. As you can see, this was my trade. Simple like that. So this is the last low. This is my target. Or you can put your TP right here. As you can see, this candle came here and then reverses. So this one is the candle that mitigates the order block. So I'm putting my stop losses above this week right here, and then I'm done. So when this market shifted, created to me a breakout structure right here, this one confirms to me that the market is now shifting to the downside, right? So don't be greedy, don't be greedy. So some of the times, most of the times, we'll be like, okay, so the market comes here, okay, and then I'm just trying to hang on a little bit. No, stick to the rules, stick to the rules, don't be greedy. When you say your profit, your TP is going to place on the next low or on the next high, when the market reaches that point, get off the market. Simple like that. You get the point. So right now we're done with the market. So I'm going back again to my M15. As you can see, the market break the structure right here, retested to my retested to this point, right? Right here, retested to this point. So this point, as you can see, as you can see, what happened? Market enters to this point, but as you can see, market came back here, sweep the liquidity, sweep the liquidity above this high. Let me just draw a line. Okay, sweep the liquidity right here, liquidity sweep, right? So what happened? So when the market came back here, breaking the structure, sweep the liquidity, and then created to me a what? A breakout structure right here. So right now I know for a fact that on my entry confirmation, this is a breakout structure, liquidity sweep, breakout structure. I know for a fact that when the market come here, right, it's going to mitigate the order block right here and then continues to the downside. So right now I don't know when or where when are you going to see this, but take note of this one. When the market comes to this point, this one I call it a protected high. Why is it a protected high? Because it already sweeps the liquidity for the market to go down. So when the market come back to this point, I'm going to place a sell and then watch the market going down. Simple like this. So guys, thank you for your time. Thank you so much.